Well, I'd like to know exactly what type of policy normalization path are we actually on. So I'm encouraged at what I see the FOMC doing. I think that one of the great but-for causes of the last financial crisis was keeping rates too low too long. Let's hope it's not a contributing factor to the next. Also want to understand what's going to happen to the size and composition of the balance sheet. And will interest on excess reserves continue to be essentially the main monetary policy tool? Because this is not your father's monetary policy. This is not your father's Fed, and we are in uncharted territory. And I think that we've kept, again, potentially rates too low too long, and I'm concerned about a Fed that may be actually crossing the line between monetary policy and fiscal policy, specifically credit allocation, by their position in mortgage-backed security. So I really want to hear a lot about, are we indeed on a path to policy normalization? Because ultimately what we really have to count on is fiscal policy, and that has to do with health care and tax reform that Congress is working on.
Not everyone thinks that way, though, Mr. Chairman. We had Mark Grant on earlier. If you watch the show, you're familiar with him. But he says normalization, if you look at the rest of the world, normalization is much easier than we are right here. And if you look at it where inflation is at this point, and you look at the other metrics, we're not rip-roaring higher where, the brakes necessarily need to be tapped. There are some people that think we ought to be staying where we are and not raising interest rates at this point. I mean, maybe the jury's still out. If we had raised 2 or 3 years ago, like a lot of people wanted, maybe that wasn't the right move. Maybe it was. I don't know.
Well, had we had higher rates prior to 2008, we might have not have had the crisis. That's the other side of the coin as well.
But we did have an 8-year sort of hangover where maybe lower rates were actually the salve that we actually needed to bring about this recovery.
Well, again, I think that there are limits to what monetary policy can achieve. I mean, ultimately, we are talking about the supply of money. What we're not talking about necessarily is productivity and innovation and the things that will happen when we pass fundamental tax reform, and hopefully when the Senate finally passes a health care bill, because we know what a burden Obamacare has been upon our economy.
Yeah, so we hope that gets done. And any thoughts on this reports about Gary Cohn and whether or not he would be, in your opinion, a good Fed chair? On the one hand, somebody who's very involved in the markets, understands directly what you're talking about, whether or not the Fed inflated assets to an unnecessary degree and to a dangerous degree by keeping money low. At the same time, he worked in an investment bank, a trader. He might like low interest rates the same way a real estate person might like low interest rates. Any thoughts on Gary Cohn as potentially running the Fed?
Listen, I know him. I think he's an incredibly smart individual. I think he serves the president well. I think there are a number of people who could be highly qualified to be our next Fed chairman. I don't see any reason why Gary Cohn might not be one of them. He's a very, very impressive individual. I've had a number of meetings with him, but there's a lot of other impressive individuals. John Taylor from Stanford, for individual, is an individual who is very impressive as well, who could serve in that role. But ultimately, that's the president's call. It's not my call. And again, I think there's a number of candidates who could serve our nation well in that role. And I look forward to it because the president needs to fill these positions on the Fed. But again, I hope that we get a Fed that will give us a more predictable strategy-based policy where, frankly, you may not want to have me on future programs because hopefully monetary policy will be operating more silently in the background.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.